Okay, so let's start a new topic, everyone, which is called as dividend policies. Dividend policies, everyone. Now, as you all know, everyone, once we have some profits, we need to distribute it to our shareholders. And we can do that with the help of dividends. Now the question comes in, is it that simple to just go and distribute dividends? Or do we have to take care of certain other things as well? Right. So now over here, we'll be talking about certain dividend policies that we have to follow while going and, while distributing the profits. Okay, everyone. So now over here, we'll talk about dividend policies. We have few dividend policies such as dividend irrelevance policy, dividend relevance policy, residual policy, then some other alternative dividend policies which are there. We'll talk about all those. Then what are the practical considerations that we have to consider while we go for the dividend. So first of all, let's talk about dividend irrelevance theory. Dividend irrelevance theory. Now, according to M&M, again, dividend policy is irrelevant. And first of all, this policy was given by Modigliani and Miller. Please remember that. We call them M&M. M and M, not. Sorry, one mistake. Gliani. Okay, Modigliani and Miller. According to them, the dividends are not that relevant to the shareholder. A shareholder is only worried about the returns that he is getting. He does not care from where he is getting the return. Is it the dividend or is it the capital appreciation? So, for them, according to them, no one cares about your dividend. Shareholder want income. Simple concept. Okay. So they said the dividend is a complete irrelevant thing. Dividends are irrelevant. All they want is the returns. All that they want is returns, everyone. They don't care, the clients don't care about the returns are coming from dividend or are they coming from the capital appreciation, because these are the only two methods that we have, everyone, right? Either we have to follow either of those things. Okay. Now, again, they came up with another theory, which was about the relevance of dividend. Okay. Then, it's not a complete or the real theory which they have given, but they said that dividend is quite relevant for few clienteles. So we call that part as dividend relevance theory. Okay, again given by the same. According to this theory, that dividends are relevant because of dividends are relevant. First reason was given by them as signaling. According to them, if the company provides dividend, it gives a good signal to the shareholders or the other investors. Very simple example. If there are two companies, one company is providing dividend on a continual basis, other company does not provide any dividend. What will be the signal to your mind? The company which is giving dividends on a regular basis is actually good, actually better than the other company. That is the signaling effect, everyone. Then we have another effect which is called as clientele theory. Within this only we have a clientele theory. Now, according to this theory, the clientele theory, there are certain clients who want to invest in your company just because you are giving them dividends. Why? What could be the reason? There can be liquidity purpose, because these clients want liquidity on a regular basis. That is why they are investing in your company. And if you are not providing them dividend, they will sell out the shares. Second reason could be tax. Taxation on dividend is different and it's actually little low than the LTCG part or the STCG part. So these people are investing in your company because they want to save returns or they want to save money that they have to pay on tax. That is the second thing. So clientele pay, you can talk about two part, everyone. Tax and liquidity. So because of these two things, we say that dividends are relevant. Okay, everyone. Now we have one more thing that is called as bird in hand theory or fallacy theory. Though this theory is the least tested area. Now, as per this theory, a shareholder's preference for cash now rather than later. Their preference is for the cash right now than the later date, and it actually appears to support the immediate payment of dividends. It may also be that the shareholders value the choice between reinvesting in the company or buying a shares in a different company. Okay, so shareholders preference for cash rather than later date appears to, appears to support this theory. Why? Because see, if they are going to get the returns in future, the risk will increase and definitely they are not looking for that. Right. So this is the bird in hand fallacy theory, that whatever the returns that they can get right now is better for them because they don't know about the future. The share might go up, the share might crash down. So better that we get the returns right now rather than looking for the returns at a future date. Okay, so this is bird in hand theory, not much tested. Highly we test dividend relevance theory and irrelevance theory. And then there is one more theory that is quite tested, which is called as residual theory. Now, as per this theory, everyone, you go and invest in all the positive NPV projects. After investing in all the positive NPV projects, if you are left with anything else, if you have anything, if you are still left with any money, then you go and provide dividends. This is your residual theory. Now, all these theories, these are your, I just put it down, alternative, some alternative policies. All of these are your alternative policies from below. We have residual theory. Then we have stable dividend policy. Stable dividend पे you pay out a constant dividend. You pay out a constant dividend. Your profit is 100, you are still paying 10 rupees dividend. Your profit is 90, you pay 10 rupees dividend. Your profit is 200, you are still paying 10 rupees in the form of dividend. Okay. Then we have constant payout. Your company made 200 rupees profit, you are going to pay 10% out of it. Your company made 300 rupees profit, you are going to pay 10% out of it. So payout may we talk about percentage. Guys, within payout we talk about percentage. And then we have zero dividend. Then we have zero dividend. No matter how much money your company is making, you are just going to go for zero dividends. You are not interested in any dividends. Why? Because you believe that why not to invest in the company so as to grow more in the future. Okay. So these are the certain alternative theories, everyone. Now, dividend is one of the manners through which we can provide returns to our shareholders, everyone. Is there anything else that we can do? Absolutely. Let's talk about certain other distribution models. So I'll just put down other manners. Okay. Now, first technique through which we can do that is share buyback. Share buyback is one of the techniques which is very famous and actually helps in increasing the value of the company, the value of the shares of the company. What does it mean, everyone? So, uh, with the help of tender offer, what company does, it informs the market that they are going to buy their shares. Let's assume that the current market price could be 1000 and buyback will be at 1200. Correct? So everyone noticed that we can make 20% quick money. What a lot of people will do, they will buy the shares in the market and they will apply in the tender offer so that the buying price is 1000, the selling would be 1200. But as the news floats in the market, lot of people start buying the shares. Because of high purchasing, the share price automatically goes up. The share price automatically goes up, everyone. Okay. This is called as share buyback, everyone. Very famous in the market. Then we have something which is called as special dividend or bonus dividend. Generally, company provides dividend once or twice a year, but let's say suddenly a particular quarter was very good. Suddenly there was some big deal in the market. So a lot of investors in the market will be expecting a dividend, right? Because they feel they're part of business. They should be the part of business. And if the company is making money, they should make money, right? So that becomes your special dividend that you do, although it's not a part of your regular business, but because your company made some good profit, that is why you provide that dividend. That is called as special dividend, everyone. Then we have one more technique that is called as scrip dividend. So scrip dividend is basically very much similar to your cash dividend only. Okay, it's similar to your cash dividend, but instead of giving cash over here, company provides share. The company provides share. Okay. the company gives you an extra share. You might think that this is very similar to the bonus share that we get, but accounting part of bonus issue and scrip dividend or the bonus dividend is different. We call it scrip dividend, and over here we provide you an extra share, that too for free, everyone. Now, one theoretical question that has been tested number of time is, what are the factors that we need to consider while announcing dividend? Factors to consider. Guys, whenever we announce dividend, there are certain practical considerations that we need to understand before we go and actually announce any kind of dividend, right? So the very first factor that we should consider is your liquidity position. If the company has enough cash flow or not. If they do not have enough cash flow, how can they go and announce dividend? Then volatility of earning, or I'll call it earnings volatility. Okay, earnings volatility. If the company suddenly got any profit or suddenly made a huge profit, they won't directly go and announce a big dividend. Why? Because it is something on a single off. It is not something which is stable. Third would be clientele. Understand your clientele. Are they looking for dividends or are they looking for capital gains? That is also very important. Then what is your transaction cost? Certain companies have to pay dividends, have to pay taxes on the dividends that they are announcing. So you have to look at your laws and rules and taxation policies, whether you are supposed to pay taxes on the dividend that you are announcing or not. Okay, then there could be certain covenants as well. So if you have taken some kind of debt, those debt might not allow you to go and announce any dividend unless or until you pay them the loan, everyone. Okay, so these are the certain things that we have to consider, everyone. Now over here there is one topic that have been tested, that is regarding the dividend capacity of the company, which is regarding the dividend capacity. But we'll talk about that topic once we complete. So I'll put a star over here, okay, which will talk about dividend capacity of company. So this topic has been tested number of time in the exam, but I'm not going to talk about it over here. We'll talk about something which is called as free cash flow, and that topic we will study in the business valuation part. Once we go through that topic, then we will go and we'll come back to this topic of dividend capacity. Okay, that will make more sense at that time.